Good morning, everyone. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar. Over the course of the show, we'll get you updates from India and around the world, the cues to watch out for during the day, and also the stocks to keep on your radar today. First things first, now speaking of US market, Handover seems quite positive on the back of gains in tech shares overnight. Tech stocks were in the spotlight and witnessed a rally following a surprise US tariff exemption from President Trump. The Dow Jones Industrial Average added 300 points or 0.78%. The Nasdaq Composite rose 0.6%, while the S&P 500 added 0.8%. However, it was a choppy session as all three indices at times traded in the negative territory during the session. However, Trump and Commerce Secretary Howard Lutnick have also suggested that the exemptions on phones, computers and chips from the new tariffs are not permanent, stirring up more tariff uncertainty. Still, Apple shares gained over 2% on the news, while Dell jumped nearly 4%. Moving on, let's get you a crude check as well. Now, oil prices rose after a tepid session on Monday, with traders monitoring the latest US moves in the trade war and the prospects of looser restrictions on Iranian crude. Now, Brent traded above the $65 a barrel level after adding 0.2% on Monday, while WTI intermediate held near $62 a barrel. Now, oil has dropped about $10 this month as the trade war stoked fears of a global recession that would hurt energy demand, especially in the US and China, the biggest crude consumers. Now, those concerns have led agencies to cut oil demand outlook analysis to slash price forecast, with the possibility of a glut amplified by OPEC Plus's surprise decision to bring back output more quickly than expected. Now, the US and Iran held nuclear discussions over the weekend that both parties characterized as constructive. Now, in the first high-level contract since 2022. The two sides are set to meet again in Rome on Saturday, raising the possibility of increased oil output from the OPEC member. Now, on the demand side, OPEC Plus countries trimmed their outlook for consumption over the next 2 years by about 1 lakh barrels a day, following a larger cut by US Energy Information Administration. Now, more banks also reduced their target prices, that is the forecast, with JP Morgan Chase now seeing Brent at $66 this year. Now, while the US stocks and oil have held steady, gold has taken a breather after a record run as risk sentiment improves. Now, the yellow metals price retreated from a record high hit earlier in the day on Monday as risk appetite improved after the White House exempted smartphones and computers from steep tariff on China. Now, spot gold was down 0.7% at $3,213 an ounce after hitting an all-time high of $3,245. The US gold future settled 0.6% lower at $3,226. Now, supporting gold, the dollar was languishing near a 3-year low against its rivals. The trade war between US and China has rattled global markets and driven investors into the metal that is gold, which is traditionally viewed as a hedge against geopolitical and economic uncertainty. Now, remember, Goldman Sachs remained most bullish among major banks on gold, raising its year-end forecast to $3,700, citing stronger than expected central bank demand and heightened recession risk affecting ETF inflows. Moving on, now keeping it with the oil space, OPEC has trimmed its oil demand forecast for this year and the next, blaming President Trump's tariff war for throttling global consumption. Now, the group now sees demand rising by just 1.3 million barrels a day in both 2025 and 2026, about 1 lakh barrels less than earlier estimates. Now, despite this, OPEC's outlook remains more optimistic than others. The US slashed its forecast by 30%, while Goldman Sachs expects only 500,000 barrel rise. Moving on, let's get you an Asia market check as well. Well, the Asia Pacific markets rose in early trade this morning after tracking the tech rally on Wall Street, but they're now trading mixed. Now, the Japanese and South Korean auto stocks rose in early trade after President Trump's comments on helping some of the car companies. Remember, these moves are coming on the back of Trump's tariff-related announcements, especially with respect to electronics and autos over the weekend. Now, if you look at Asian stocks, Japan's Nikkei is leading with 1% gains overall. Over in South Korea, the Kospi index is down about 0.5%. China's Shanghai index is also down about 0.5%, whereas the Hang Seng index from Hong Kong is trading about flat. lower at lower by 0.11%. Now, if you look at Nifty back home, it ended around 22,800 levels on Friday. This morning, implied Nifty suggested a strong gap-up opening above the 23,300 levels. Going forward in the day, that's almost a 2% higher level than the previous close. All right, then that's about the markets. Moving on, let's get you some more news and updates on the global front. Now, tech and auto stocks revved higher as Trump floated new tariff exemptions. Electronics like smartphones were spared over the weekend, and now Trump says he might ease auto tariffs as well to give manufacturers more time. Now, he added that he doesn't change his mind, but it's flexible. Apple, Dell, and ASML led tech gains while auto shares rebounded on hopes of relief. But the broader market remains down for the year, with investor nerves frayed by Trump's shifting trade playbook. Listen in to that excerpt.
Yesterday, you mentioned short-lived product exemptions. Which specific products are you considering, and how long is short-lived? Weeks, months?
I'm looking at something to help some of the car companies where they're switching to parts that were made in Canada, Mexico, and other places, and they need a little bit of time because they're going to make them here, but they need a little bit of time. So I'm talking about things like that.
What about any Apple products, other cell phones?
Look, I'm a very flexible person. I don't change my mind, but I'm flexible. And you have to be. You just can't have a wall and you'll only go. No, sometimes you have to go around it, under it, or above it.
All right, moving on, but keeping it with the Trump tariff space. Confusion clouds Trump's tariff playbook yet. After the president announced that electronics will be exempted from tariffs, Commerce Secretary Howard Lutnick says that electronics will face new sectoral tariffs in a few months. Now, what's clear is that the bigger goal is to reduce reliance on China for critical tech. My colleague Sumita Curry joins in with all the details on the latest tariff flip-flop.
Yes, in fact, just as the world was cheering, exceptions were granted in terms of tariffs in sectors like semiconductors, electronics like smartphones, hard drives, processors, and chips. Now an update has come in from U.S. Commerce Secretary Howard Lutnick. In fact, he was speaking to a television news channel in an interview where he stated that tariffs on some of these sectors like semiconductors and pharma, he spoke about specifically, will be coming in a month or so, and electronics tariffs will be part of special sectoral tariffs as well. And why he said so, why Donald Trump administration is thinking of perhaps another U-turn, because there was an exception that was granted by U.S. Customs just on Friday. So he said that the United States cannot depend on its basic needs for chips and medicines on Southeast Asia. And with Southeast Asia, he was referring to China. Now, this is a move to cut or to reduce United States dependence on China for critical technologies, for medicines, etc. In fact, he was also speaking about China. Given that the trade war between the two countries has only intensified, he said that we will end up in a reasonable place with China, and he expects that President Trump and Xi Jinping, the Chinese president, will work it out. Meanwhile, a confirmation on these sectoral tariffs that will be implemented has also come up from Donald Trump, who's posted on Truth Social, and I quote, "No tariff exceptions were announced. These are part of 20% fentanyl tariffs." He also says that we're taking a look at the whole semiconductors electronic supply chain in the upcoming national security tariffs investigation. So that's as part of the additional, tariffs that could be imposed on these sector-specific segments. But meanwhile, just as this is happening, Chinese President Xi Jinping is all set to take part in a Southeast Asian tour where he's expected to visit countries like Vietnam, like Malaysia and Cambodia. This is, of course, as part of a visible push on his side to increase trade partnerships with other countries, just as the country is reeling with respect to a trade war that's going on with the United States.
All right, then as the tariff uncertainty continues, Swaminathan Iyer, the consulting editor at ET Now, shared his view on the ongoing tariff war, which has hit across the world. He also added his view on how the recent tariff reversal will impact India. Listen into his views.
There was a danger at one point, I think, with the financial meltdown down, that even US gilts and the dollar might have gone for a 6. That has been averted. But nevertheless, if you are going to have a major slowdown, both in the USA and in China, all of us are going to be hit. And this, frankly, is a much, much bigger impact on India than any talk about the bilateral tariffs. Bilateral tariffs, you have no idea anymore because the word reciprocity no longer has any meaning, it would seem to be. It would seem that Mr. Trump wants to put a tariff on anybody who has a trade surplus with the USA. And how much, completely uncertain. There was some bogus formula which will hopefully be changed. But all I can say is uncertainty, major slowdown, not a good outlook for equities. So yes, India may pick up a little bit here and a little bit there. That, I regret to say, will be more than offset by two things. One is the global slowdown that's coming. The other is Mr. Trump's wanting to see everybody shrink their trade deficit with the USA. So as I said, India may not be the worst hit. China is unquestionably the worst hit.
All right, that's the cue on. That's the expert view on U.S. tariffs from Swaminathan Iyer. Now, moving on, two key U.S. leaders may touch down in India this month. Vice President J.D. Vance and NSA Mike Waltz. While Vance is here for official talks and family visit, Waltz will kick off tech talks under the Trust Initiative. Now, the back-to-back visits come as India and US push to seal a landmark trade deal by fall. Sumita Curry joins in for more details.
Yes, an important update so far as the visit of United States Vice President J.D. Vance's visit to India is concerned. Well, he's likely to visit India between April 21st to April 24th is what sources are suggesting. In fact, an official word hasn't come yet on this from the External Affairs Ministry, but a high-level visit, another high-level visit after the visit of U.S. Intel Chief Tulsi Gabbard. She came a couple of weeks back to take part in Raisina dialogue that was organized in the national capital a few days back. Now, this visit is important from a couple of points. Number one, that India and the United States are negotiating a bilateral trade agreement. In fact, the two sides are maintaining that it's going to be mutually beneficial. So his comments on that front are going to be very crucial, given the fact that he's coming right in the midst of a 90-day hiatus that's being granted by Donald Trump to countries on account of reciprocal tariffs. So that is also key. Another thing is that the United States and India are also looking at forwarding their trade ties and are looking at achieving $500 billion in a trade by 2030. Given the fact that this is also coming in after the United States trade representatives came to India in March to decide the terms of reference for negotiating the first tranche of bilateral trade agreement by the fall of this year. In fact, sources suggest that those terms of reference have now been finalized. So this is important from that point of view, what shape it really takes and whether these discussions will be advanced, given the fact that J.D. Vance himself is visiting India. That will be interesting to watch out for. Meanwhile, we're also learning that US NSA Mike Waltz could also visit India in May. He was supposed to visit India in April. However, that's been postponed according to what sources are suggesting, but lots of permutations and combinations on that front. But for now, it's J.D. Vance that is visiting India, given the fact that trade negotiations between India and the United States are going on. In fact, trade between the two nations reached $129 billion in 2024. Meanwhile, a key agenda for Waltz when he visits India will be the Trust Initiative, or earlier the ISET Initiative, which essentially is a partnership to bolster, is an initiative to bolster partnership in areas of emerging technologies like semiconductors, quantum computing, energy, and space.
All right, that's the latest coming in as far as India and US trade talks are concerned. Now, moving on, latest commentary coming in from hedge fund billionaire Dalio. He has raised concerns on the US economy under President Donald Trump's trade policies. Now, Dalio has warned that the risks go far beyond mere economic downturns. In a stark message, he cautioned that US may be facing a crisis worse than recession. Next up, a key Fed voice is signaling flexibility on interest rates. Governor Christopher Waller says if Trump-era tariffs push the U.S. economy towards recession, he'd support cutting rates even if inflation climbs. Now, speaking in St. Louis, Waller said that he'd prioritize preventing a deep slowdown over fighting temporary inflation, which he sees as transitory. Meanwhile, Fed's Raphael Bostic remains cautious, warning that inflation is still well above target and bold policy moves aren't prudent in today's economic fog. Now, both stress that tariffs could delay progress towards Fed's 2% inflation goal. Next up, Goldman Sachs beats Wall Street expectation thanks to a 27% surge in equities trading. And the bank posted an earnings of $14 a share, well above the estimate, with revenue hitting $15 billion. Trading gains helped offset a decline in wealth management and investment banking. CEO David Solomon acknowledged choppier waters ahead but struck a confident note. With that, it's time to take a very short break. We'll be right back on ET Now. Stay tuned.
If you like this video, then like, share and subscribe to ET Now.